Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Welcome, everybody, to another episode of the Private Equity Profits Podcast. I'm Cliff Locks, your host, and today our guest is Alina Trigub. Alina spearheads the marketing and investor relations, as well as the education activities at TF Management Group. Alina's expertise has been built upon her personal journey as an equity investor, as well as through SAMO Financial, the company she founded and built to provide education and alternative investment options to her clients. Through SAMO Financial, Alina and her investors have been able to build an extensive investment portfolio and invest in various commercial real estate, including and not limited to apartment buildings, self-storage, mobile home parks, and many other commercial assets. Her passion is to teach others how to build wealth by investing passively. Alina is also the founder of the virtual meetup group named The Power of Passive Investing Through Real Estate, where Alina offers instructional webinars in collaboration with various administrators and self-directed IRA companies. Alina, welcome to the show, and thank you so much for being here today. I'm excited to have you on.
Cliff, thank you so much for welcoming me. I'm thrilled to be here.
Tell me about your background and how you ended up in real estate investing.
It's a long story, but I'll try to shorten it to spare you lessons from listening to the long one. So almost 30 years ago, my mom and I immigrated to the United States from what used to be, when I immigrated, Soviet Union. And at that time, I was at the point where I had to decide what kind of degree I wanted to pursue. Someone told me, hey, you're good with numbers, just go into accounting. I went with that. It sounded like I would get well compensated, which I did. So I went for the degree in accounting. And as I took more and more courses of accounting, I realized that I didn't really like those courses. So a friend of mine told me, don't worry, once you start getting paid, you'll enjoy it. So I waited till that finite moment. And when it came, the compensation was incredible. I started with what used to be Big Five at the time, Ernst & Young. And I still couldn't come to an agreement with myself that I like the field. So I tried public accounting, then I tried private, and decided that the tax accounting was not for me. I need to try something else. And I went and got a job in the information technology field and had over 20 years of successful career in the information technology world, where I had multiple roles, all of them revolved around being the liaison between the world of business and the world of technology. And I really enjoyed that. And I've taken some of that and put that into my own company, which you mentioned, SAMO Financial, which was started after I became real estate investor. And how I became real estate investor as a former tax accountant, while my career, so was my husband, kept growing, so were tax brackets. And that really bothered me. And I wanted to find ways to lower tax implications. And real estate kept coming up. So I finally decided that I need to take action, need to start researching and find ways to invest in real estate that would be beneficial for our family, provide some tax advantages. To my surprise, I came across real estate syndications, became an equity investor, have been investing for a while, and I started sharing my journey with my colleagues at work, with my friends and colleagues and acquaintances. And mind you, because I have financial background, most of my friends, or at least half of them, are in the brokerages of Wall Street and financial industry, bottom line. And none of them have ever heard of syndications. I was completely shocked. And that made me realize this is not publicly advertised. And because I wanted to help other people to essentially follow my footsteps, I decided to start my own firm, SAMO Financial, with that purpose in mind of helping other folks build their wealth and diversify their portfolio through real estate syndications and do it without any interruptions to their day-to-day life and save on taxes at the same, which was incredible. I've been running SAMO on the side for quite some time. And then about a year and a half ago, I became a full-time real estate investor and wrapped up my successful information technology career. And then about a year ago, a mutual friend introduced me to Mike Zlotnick, who is the fund manager and CEO for the TF Management Group. And we immediately hit it off, and Mike invited me to join the group. And I joined them as the head of investor relations and marketing efforts. And here we are talking today.
You had a great career. You were very early. Think about that. You found financial, the CPA side of it. And then you looked at the informational technology, which IT, you're seeing machine learning, AI is moving into that direction. So you're seeing the portfolios. And I thought it was very, very positive how you look at passive income, which is really the key to wealth. So you're making money when you're sleeping, and you get to deploy these assets intelligently through smart people like yourself and the team over at TF Management. A lot of value forward to the investor, where they've got a real professional that has the back end and really understands what a pro forma is, the internal rate of returns, and the other metrics that are in place to put together syndicated deals and do it right.
If I couldn't agree more, and part of it comes from working on the personal development. So while I started researching real estate, at the same time, I started reading more and more of personal development books. And while it's not personal development, but George Clayson's The Richest Man in Babylon comes to mind. It's definitely one of my favorite. I couldn't understand how a book that over 100 years old, essentially an ancient book, talks about a rudimentary concept that was true back then and still true today, where you have to always pay yourself first. I mean, how simple and yet sophisticated this concept is. And many of the other books that I read after that, Rich Dad, Poor Dad, I mean, a number of books in the real estate world, the multifamily millions and so forth, they all added up to that personal development, which doesn't only come from the educational part, but it also comes about not stereotyping things, but being open-minded and looking at things from a different angle. Some people look at the real estate investment, whether it's active or passive, regardless, they think, oh, how much money do I need to put into this project? You have to look at the project, how much do I need to invest and how much equity am I getting up front? If you look from a different angle, you get to understand how many advantages real estate has over many other industries. And granted, I'm of an older generations, and my personal approach is to invest in tangible assets versus things like Bitcoin, which I still cannot understand what it is. I probably haven't spent enough time in the field, but I've always, majority of millionaires and billionaires of the world have made their main wealth through real estate. And when people look at real estate, they look at the returns, they think, oh, I can make X percentage. Don't look at the X percentage. Look also how much of tax savings you get at the same time. If you're saving 10, 15% of top or even more, I mean, think of that opportunity and how much that's bringing into your bottom line.
We also were in inflationary times. So the hard assets, let's talk about that. Give us some feedback on that.
You have no idea how many people are running to real estate investing these days. I mean, my phone has been off the hook. And the first thing that many folks are saying is, I just don't know where the stock market is going to go. I mean, look at the recent developments with Michael Burry. I mean, he sold off his entire portfolio. I think Cyan Asset Management is investing in 5 stocks, if I remember correctly, at these days. And it does not include Google, it does not include Amazon, not even Facebook. So if people that have made history by the famous movie, The Big Short.
Very good.
Yeah, made history and they're telling us something by changing their overall portfolio. And if I see the trend of people coming to us and saying, I don't want to be in the Wall Street investments right now, or I want to be able to diversify it, I want to save some with, those charts are probably telling you something that there is a potential correction that's coming up. And in addition to the inflation, there are many other factors. No one could have ever predicted the pandemic would be it. With the pandemic, there is still a lot of unpredictability, and a lot of people don't realize that events like this don't turn around over time. We are to live with the consequences of the pandemic for many years ahead, whatever those consequences are. But we need to be adjusting our portfolio, our life approach, looking at our health situation, family situation, legacy, everything from this new standpoint and this new environment. It's never going to be the same from this point on. And I hope many folks are realizing that.
Very insightful. And thank you for sharing that. You put an emphasis on helping clients create passive income. What are your tried and true methods to do this? Is it mostly real estate, or are there other areas?
Excellent question, Cliff. So we at TF Management concentrate 100% on real estate. But when I talk to our clients or even our potential clients, I always tell them, look at the picture overall and see how well diversified you are, and look at the pros and cons of each individual investment. What are the tax consequences? And I know I'm coming back to the taxes a lot, and that's because of my background and because I guess I was taught well how to take care of the taxes. But in general, look at what your portfolio is doing to you, your family wealth, your legacy, and how is it impacting you and future generations, and what can be done. And historically, real estate has been one of the better assets where the tax advantages are just so significant that it's hard to overlook. So we always tell our clients, look at real estate, but also look at the other alternatives. And when it comes to education, the first step for us, at least, is always to assess the situation, see how much clients know and understand what real estate investing is, what are the syndications, what is private equity. One of the more common questions that I get is this a REIT? And I go into this lengthy discussion explaining folks, how is private equity investing different from REIT investing? What are the pros and cons, and where they can get more information and learn more about the differences and decide which one is more appropriate for them, one or the other. But for us, education is not just one size fits all. We take individualized approach based on a specific client situation as to what they need, where they are, and how it's impacting them, their family, their future generation, how much of that education they're willing and interested in undertaking. And we provide that in chunks that are digestible and in a way that's easily understood. The feedback has been very, very positive in terms of understanding our approach and working with us.
You keep bringing up legacy and the next generation, and that's a very important part of what I bring forth, is involving our children in what we're doing and having conversations with your fine organization. Because I see you also were part of, you're handling the marketing and investor relationship over at TF Management Group. Those are the tool sets that are available for our listeners to come in and get educated and bring their children along with them, to allow them to understand the fiduciary responsibilities they will have as we continue as seniors. We'll age, and we have that legacy, and we're going to have to make a decision what we're passing on to our heirs. So I think that's a very, very important conversation that our listeners need to have within the family, and then bring it forth to people like yourself that can actually provide that opportunity to get further educated.
I couldn't agree more, especially on the topic of legacy, because when it comes to legacy, it's not only about how much money you can bring to future generations, and because, as you know, it may easily get lost in a generation or two, but it's also about educating future generations and getting them involved as early as possible so they understand the importance of running a well-diversified portfolio and the importance of investing in the assets that are appreciating over time and in the assets that are tangible and maybe intangible if they're comfortable enough with those intangibles. Mm-hmm. But in general, having the future generation be part of these conversations, I always welcome our clients to bring their family. And some prefer to even bring their financial advisors. By all means, I'm more than happy to speak with them and their financial advisors at the same time to make sure that all of the questions are answered at the same time and there's no broken record in general.
I see more and more family offices are being created at this point. So that is the resources that are there to work with brilliant individuals like yourself to get answers. You're handling the marketing and investor relations. Tell me what it entails and what value does it provide your firm and also the clients?
For TF Management Group, investor relations and marketing and supportive effort is really about people. We are in the business of working with other individuals, and we put our investors first before anything else. So establishing and building the relationship with the folks is in the forefront goal for the TF Management. And I've been putting a lot of efforts into that by getting to know people, understanding their needs, understanding what families are looking for, not just blindly dumping on them various portfolios and saying, here, take it, decide what you need. But first, understanding why people are coming to us, what is it they're looking for, not just to do with their money, but more importantly, what are they looking to achieve? Why are they here? They are investing because maybe they want to pay for their kids' college education, or maybe they want to support their retirement, or maybe they're investing because they want to build a school in some underprivileged district, or start an endowment fund or do something else. Whatever their goal is, whatever they're trying to achieve with the money, we always have that investor goal in mind first and try to work with that goal to make sure that we can find the product that's aligned with that goal and that will help our investors achieve that goal. Because again, for us, establishing and building the relationship and making sure that we are supporting the people in their long-term goals and needs is the most important thing at TF Management.
It's an important conversation. What does the vision of success look like? Over what period of time and what kind of returns are they looking for to be able to support their standard of living and what they're looking to leave, as a legacy at this point? So there's many opportunities, and real estate provides a very vibrant way to do it with consistent returns. Tell us about the TF Management. What is the culture there? What is the team is focusing on?
The team is super close, super supportive. Some of our folks are working remotely, but that has never been an impact. The team has actually started working remotely years before the pandemic has started, so we had no impact from that perspective. A lot of our team members have a technology background, including Mike Zlatnik, our CEO. So we're all very technology savvy and know how to leverage technology for our goals. In addition to have a truly cohesive and supportive team, we're also working with a lot of other partners that are supporting us. For example, for our portal needs, we're using the company called Verivest. Well, Verivest also happened to provide accounting and taxes, and to be fully transparent with our investors, our audience, we decided to engage with them to work on our accounting and taxes. Our goal is to stay fully transparent, and that's why Verivest does all of the back office support, accounting and taxes for us, and it's been working out really well for our team and our investors.
So that's an arm's length relationship with a strategic organization handling the back office and the financial, and you're getting a very transparent visuals of what's taking place in your portfolio, which is that's a unique point where everything is outsourced to a third party where it's getting audited. So it's more than just using a CPA to do the audit. Actually, the back end is set up So they specialize in real estate is what you're sharing.
Absolutely.
Okay.
Not only that, but this decision was strategic in a sense that we know that we don't need to concentrate on that. We have the partner, strategic partner that has the expertise in the field, and that's why we're letting them take care of it. So we can concentrate on our task at hand, which is building a diversified portfolio of funds that's serving our investors community.
It looks like you have a passion for education in several of the roles throughout your career. It looks like education has been a common thread. What drew you to that?
I've always been, as I remember myself, a student, and not necessarily in literal way, but in general, I've been learning a lot from other people. And that's why I feel very passionate about sharing my knowledge, not only with my own kids, but also with other people, because I know that my knowledge can benefit them tremendously. Many people are afraid of taking the first step, and that mainly happens because they're not familiar with the topic. Once they start getting educated and understand how, let's say, syndication works, or what is private equity, what is private placement, once they become comfortable after asking questions, reading about the topic, and getting fully educated, people are able to take informed decisions. They act a lot faster. Truly grateful to have the opportunity to impact as many lives as possible and help folks to take the steps in the right direction to build their wealth and diversify it and save on taxes through the means and the channels that they might not have been familiar or have never heard about in the past.
My listeners, the idea of getting educated, looking at the verticals you feel very confident in, and then continue to bring in strong individuals to help them flourish in that area. You had brought up crypto earlier, and not everybody is aware of what crypto is. And it's inflation. It's trying to battle what inflation is at this point, because we've got a fiat currency. It's got inflation in it. They continue to print and spend.
Right.
There's no way to pay this debt back. So they're going to inflate their way, in essence, to make an attempt to pay it back. So real estate's got hard assets, and you can see the value proposition. It'll inflate, but you got something that actually is physically there that will continue to be formable in something that can actually be sold.
Absolutely, Cliff. And I would add to that, for someone like myself whose education and experience is in accounting in the past, I'm used to seeing the financial statements. And that was one of the other aspects that attracted me to private equity, because with the crypto, as you brought it up, there is no background. There's nothing to base your opinion on. In real estate, you receive the financial statements that are based on the actual, physical asset, and past results. Granted, no past results ever guarantee future performance, but you can make projections. You know how the market operates. You look at the specific local market, and you know that market fundamentals. If you don't know, then you search and you do your research and find out what they are, and you base your projection on the existing real financial statements. And that was one of the truly amazing factors that attracted me to real estate, because for someone who loves working with the numbers, having that foundation and base helped a lot to make the informed decision. So I was really thrilled about that.
So you're really looking at the risk tolerance of the investor at that point. The real estate is much more consistent with its returns.
Absolutely. Consistent and cyclical. Yes, real estate is cyclical, but what you also have to keep in mind that those cycles are hyper local. We can't compare the cycle in Manhattan with the cycle that's happening in Minnesota, Oklahoma, or any other state. It's very different environment. Primary markets versus secondary or even tertiary. Plus, each market has its own preference. Just today, I was actually writing a post on LinkedIn, and I was using the Yardi metrics statistics about the rental market in the city. And according to that report, the rent amounts have increased in Manhattan by 15% as of the September of this year. I mean, only within a year, the rents have been able to increase by so much, and the demand is astronomical. I mean, people are flocking back, and granted, a lot of them are millennials, but they're going back to the city. They're going back to the places where they can experience life. So people are trying to adjust to new reality and take advantage of what can be done in the city versus tertiary markets where they wouldn't have the same opportunities.
We also see the politics where people are actually getting up and leaving California at this point. They're going to Texas and Arizona and some other states. So as you suggested, it's hyper local and it has implications of what the future will look like and where investments will take place. It's interesting. We live in an ecosystem.
Yeah, no, definitely. In addition to politics, obviously, Texas is one of those tax-free states. A lot of Silicon Valley companies have been moving their headquarters there, and people just want to experience and live in a warmer climate. I see a lot of people living from the tri-state area, from where you and I are, and going into the Texas and the Carolinas, where it's much warmer. I mean, it's probably 40 degrees today outside, and it's probably going to get colder in a few weeks. And some folks just want to continue living in a warmer climates.
It's interesting. I had a client in Chicago, the CEO of the company, and he said, we're moving the headquarters to Texas. The company's moving.
Sure.
The board gave it's okay, and that's what they're doing. And so is it disruptive? The answer is yes, but I think the employees will be happy down in that market. So I focus on private equity. Are there any trends you see in the market currently or going forward? Any insights you can share with our listeners?
Sure. So from a private equity component, I would say I see some of the newer trends, especially the ones that have been created during the pandemic, as conversion of the hotels that have been suffering into the multifamily, and not just any multifamily, rather affordable housing. We at TF Management actually picked up that trend relatively early, and we partnered with the operators that were working on such conversions. And I can happily report that we already have at least one or two projects that are turning around and providing significant results. First of all, these projects were bought at the prices that were lower than the price per unit, as if it were multifamily. And second of all, this is happening in the markets where there is a huge shortage of the affordable housing. So not only we're repositioning the asset, that's a lot easier to reposition because those could be the Ramadas Inn, the hotels that already have some sort of setup to have a small kitchenette, bathroom, living area, in some cases, bedroom area being separated, but also it's happening in the markets where there's a high demand for affordable housing. So we're helping the market, and by the same token, we're helping our investors by bringing the investments that are doing absolutely fantastically, benefiting folks from multiple angles, for sure.
That's a benevolent way to market. Look at the financial side for the investor at this point who wants to give back. That's in their DNA. That's a benevolent way to do so.
Absolutely. Agree.
Excellent. Is there anything I haven't touched on that you would like to add?
That's a great question, Cliff. As you mentioned, I think education is a significant component for anyone who is interested in learning more about private equity and deciding whether private equity investments are for them or not. So I would say take the time to educate yourself, understand what private equity is about, the pros and cons of it, and then take action, start investing, because with what's going on with the current economic conditions, where we're heading, and with the history of long-lasting millionaires and billionaires, private equity has been here for many years and has created many wealthy individuals. So it is definitely a field for the folks that would like to continue building their wealth, that want to continue building their legacy, and they want to find the field that will provide them strong investment opportunities.
Thank you so much for joining us today, Alina. Your breadth of experience and focus on education is an extremely valuable commodity in our industry. The insights you have shared will certainly prove valuable to our audience. I'll share your company's web address, tempofunding.com, which is spelled TEMPOFUNDING.com. Again, that's TEMPOFUNDING.com. Alina, would you like to share your contact information for your organization to our listeners?
Absolutely, Cliff. And thank you so much for inviting me to your podcast. My contact information is alina@tempofunding.com, or your listeners can find me on any of the social media platforms, LinkedIn, Facebook being the most popular, or they can find me through samofinancial.com as well. And again, I'm very, very grateful for the interview, and it's a pleasure to be an acquaintance of yours.
Alina, I just want to compliment you. Some of the videos that you've put together and the interviews that are out in the market, sitting on YouTube, bring forth a tremendous amount of education. And our listeners should look there, with some simple Google searches with YouTube and your name, a large collection of high-level, high-value education. I want to thank our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. This show has been produced by Market Domination, LLC.